Hello, everyone. Welcome back to the Security Token Show, Episode 3. My name is Kyle Sonlin, and I'm joined with my co-host, Herwig.
Hello, everyone. Thanks for tuning back in.
And we're really excited about this week's episode. We're going to be discussing IEOs for STOs. And I'm really excited about this theme because IEOs, or Initial Exchange Offerings, are the latest popular acronym to hit the blockchain world. And they have a great application in the security token industry, and we're going to dive deeper later in this episode into that topic. But before I do that, Herwig, I'd like to pass the mic to you. We can talk about some security token news.
Thanks, Kyle. It's another great week of info. As always, we're sourcing all of this information from Security Token Market News. You can check out that portion of our website and cover all the articles that we've been discussing in our previous episodes, as well as this one today. But for many of you, you'll know that this is a rather new podcast, and we didn't get to necessarily cover a lot of the information that was happening in June. And Angela, one of the great users, submitted the June 2019 Securities.io month in review. It's a monthly review that they do every month. In June, there was definitely some notable information that we haven't yet talked about on the show that I definitely want to cover. And the first of that is GlobaCap. GlobaCap is actually another issuance platform that has gotten FCA approval. They were in the fourth cohort of their sandbox trials with the FCA, alongside, as we know, Token Market in 2030 that we discussed last week. And it just continues to show you that there's really a lot of innovation and technology coming out of the UK, Kyle. I experienced something similar to this back in the equity crowdfunding days, where we would look at our counterparts across the pond, and you'd see this very same thing that we're seeing now, a more active, friendly regulatory environment actually being a proponent and an advocate for these types of technologies with these types of companies. Despite everything that's happening here in the U.S., and of course we see a positive outlook here as well, it's just a more inspirational and opportunistic time there, I think. And so we're going to see a lot more FCA activity with all the different issuance platforms, and it certainly seems like we're primed now with multiple issuance platforms for a lot of assets to be coming out of Europe, which is very cool. The same thing in the same month of review, that is a subject that is certainly worth mentioning, is the SEC lawsuit against a company called Kik. For those of you who don't know about Kik, Kik is actually one of the more successful initial coin offerings during the craze of 2016, 2017, and they actually raised $100 million for that ICO as a fundraising platform. At the end of the day, that the SEC clearly sees as a securities offering as a result, and it's definitely more insight to that is that the Kik backers also include very notable venture capitalists and institutional investors, and so there is definitely more legs behind the Kik offering if it were to, say, be completely funded by a bunch of random people all around the world. So this is a very tactical battle that's going on here. Venture capitalists, specifically those who have invested actively in crypto have a bias towards making sure that their tokens can find wide reach and therefore hopefully gain economic value. And of course, if they were to be classified as a security, that definitely puts a hamper on a lot of those activities. So they're very motivated, and this could be one of those precedent cases that if the courts decide, hey, Kik was able to do this, okay, the SEC and then a lot of past lawsuits and issues and fines and all that's going to get challenged and across the board. It's certainly going to be interesting to see this one play out, Kyle. If I had to put my money on it, I would put my money on the SEC staying true to what's been happening here, which is this is one of those classic ICO examples that definitely triggered the Howey test. It's the test that the SEC uses to qualify whether something is a security. The only difference here is, as I mentioned, that Kik definitely has resources and firepower and credibility to try and fight this. I don't know, what are your thoughts, Kyle? Who you betting on?
It's really interesting. I think that you did a great job of summarizing. Just for even a slightly additional piece of context, Kik is a large messaging app. They rivaled Facebook's Messenger and WeChat and some of these other, maybe not to the size of WeChat, but I think they had a couple 100 million users or so. And so They had a great platform, but we're really struggling to monetize. Like many of the apps we see today, when you're looking at a Facebook, when you're looking at a Telegram, or many of these other options that are also looking to cryptocurrencies to streamline payments through their platform. But the problem that we're seeing here with Kick and Kin is that there's no ownership stake for this fundraise. There's no opportunity for investors to have any protections, and so the SEC is kind of looking at this with a critical eye as a potential scam investment. And so when we're talking about the SEC prosecuting these applications for their ICO, really what we're talking about is the SEC solely saying that they were not allowed to fundraise this without properly registering it as a security and using either one of the private exemptions that we talk about very often on this show, or doing a public offering like you see with a company like Facebook, that they need to raise a ton of money, so they have to go public. You see Snapchat, right? A lot of these companies, they will have to go public when they scale to this size, because that's the only way that they can realistically raise this $200 million.
I feel like we could probably spend a whole podcast just on this subject. Maybe we will once we start seeing some more information. Again, this is definitely one of those landmark cases that whatever happens could drastically alter and impact the blockchain world. But for now, it's going to have to be a wait and see. We can, last year we did see a lot of activity from the SEC, a lot of high profile cases, but a lot of the time they ended up with a slap on the wrist, doing good and explaining to them what went wrong so that the rest of the market and industry can learn. This seems like it's a little bit more high profile than that, so it's going to be interesting to see what the SEC ends up doing. Moving on, the last article that definitely I want to bring up that was a little bit more confusing to most, and it's the article of security tokens versus tokenized securities. And I gotta say, this one really went a little bit over my head. I think some people try to dive in and take into terminology maybe a little too seriously. And personally, frankly, I think this article maybe caused a little bit more damage than it did do good. The author tries to review the fact that based on their positioning and the noun and the verb, etc., what's happening here is a change of a meaning. So security tokens, he claims, are a type of technology, whereas tokenized assets are taking existing assets and then making them tokenized. It's a rather long, lengthy article. But ultimately, I think this just highlights how much lack of clarity and information and understanding there is in the space. I mean, to me, they're one and the same. You're taking an asset, whether you're creating a new one or you're taking an existing one, you're using the technology of tokenization, which is in both words. So very clearly, to me, demonstrating you're talking about leveraging blockchain for securities and assets. And the author even goes as far as to say and differentiate between utility tokens and security tokens. So they acknowledge that. But it seems like, the concept of tokenized securities versus security tokens was a little beyond to the point where it needed explanation. And this is the type of noise that in the long run, it doesn't really matter. But, I think this one gave me a little bit of a headache to read, Kyle.
Yeah, it can be a little bit confusing with all of the different terminology, and as I think you said, it sometimes can complicate more than it helps, just in the sense of we're all leveraging and using securities exemptions to put assets on the blockchain and be able to trade them in a liquid fashion. We don't have to spend so much time talking about the nomenclature.
I gave you my opinion, but this is everyone's industry here, and so certainly send in your feedback, send in your thoughts and comments. Go comment on this article on STM and let us know how you feel about the terminology.
Totally.
Now let's move into some more of the more actual recent news that's been happening. In fact, about a week ago, I think, David Hodge, who is the director of European operations for AI Consultants. AI Consultants is a 25-plus-year-old employee-owned international consulting firm that provides comprehensive services to commercial lenders, property owners, managers, tenants, and developers, the real estate stakeholders, if you will. And they have clients like Fortune 500 companies, which goes to show you that they are a very well-known firm. And David Hodge really dives in on the subject of fractional ownership, the potential of title registry with DLT technology, valuations, clearing and settlement, and everything through and through on the real estate side. And I actually completely agree with David Hodge that, especially with real estate, this has a tremendous application, not just on the security token side, but where blockchain can help with exactly things like title registry. And in the end, they are all tied to each other, because when you have it registered, you want to make a security out of that and start to create access to it. They are tied to each other. And I personally like the idea often for real estate about being able to tie in information like condo sales, rental occupancy rates, delinquency or past due payments, etc. All of these things that help investors make a decision on real estate, but ultimately and oftentimes is not very transparent information that isn't even available or requires very active due diligence and follow-up on behalf of the investor, which is something no one wants to be doing. So great article if you're interested in real estate. Highly recommend you go check it out. But moving on, I have another real estate article where actually claiming that Paris is one of the first in Europe to tokenize real estate, specifically referring to the Anna Villa, which is a $6.5 million euro luxury property based in Paris, of course, and it's being tokenized on Ethereum with a issuance platform called EquiSafe. And normally this would be something that is left for Kyle to discuss in his STO news section, but in the end of the day, the article also expands on the real estate industry itself. And there's definitely a lot of useful and insightful information in there, especially if you're in the real estate side of things. Definitely recommend go checking it out. They claim that they've done a rather in-depth report of all real estate blockchain companies, claiming that as of the beginning of this year, almost $400 million has already been invested in infrastructure. Certainly lines up with some of the research that we've been doing. And they said that they've looked at 168 real estate tokenized projects and have seen them raise projects and also looked at prop tech and tokenized assets as well. I do have to be a little critical because nowhere in the article does it really claim or back up why Paris is the first in Europe. In fact, through their information and research, they claim to have looked at 168 real estate tokenized projects already, 20 of which are in the UK alone. So I'm not really sure how that would make this new, tokenized investment one of the first. But I applaud it, of course. And again, I think there's tremendous potential for real estate and security tokens and blockchain. So definitely go check that out if you're interested on that subject. And last but not least, similar to the topic, IBM is working with top Australian banks to pilot a blockchain for retail leases, bank guarantees. And a little more information regarding this. IBM is specifically working with Center Group, a massive real estate property group, and they've been teaming up with banks to digitize the data from a test group of leaseholders with Center Group all across Australia. And that platform that they're using is called Ligon. Ligon's purpose will be to shorten the time that it takes for banks to issue guarantees, reducing that from time that sometimes take weeks to a month to, they say, a day. Of course, it's all issued on paper and industry best practices, when we all know that blockchain and security tokens could dramatically improve that process in the long run, even create liquidity for such instruments. And they even mentioned that contingent on Ligon being a successful proof of concept as a pilot, they intend to roll this platform out to all banks, issuers, lease applicants, and beneficiaries to use the platform. So that seems to be like a very exciting initiative there going on with IBM. Kyle, I'm going to pass it over to you because I know you have an interesting article that you really wanted to talk about.
Yeah, I'm very excited to announce that Dreamer has launched their initial offering for their security token, and the slight wrinkle that we're very excited to discuss, and one that we'll definitely talk about in more detail, is that it will be through an initial exchange offering through LA Token. And so Dreamer is a fundraising platform for personal dreams and desires, which is very interesting and they also are fundraising to create a funding branch themselves to be able to assist in users who are looking to fundraise for many goals and projects and desires that they may have in their life. And so on that same topic, Angela from STM News also submitted an overview on IEOs and their origination from the ICO alternative. And so in terms of initial exchange offerings, as we discussed earlier, really what we're talking about is an exchange launching the fundraising process through their exchange such that when the funds have been completed, when the fundraise process has been completed, the investors can be sure that the specific investment that they're buying into is actually then going to be traded on that specific exchange. And so this is something that started in the crypto space, but was modeled after something that we've seen forever with traditional offerings. Very often when a company was going public, it would be very apparent to investors where they're being provided liquidity, right? So if you have any traditional stock company that has raised money recently through an IPO, it's very clear where they will be IPOing on, which is referring to the exchange. In the same way, we saw this with crypto, and I think it's something exciting for security tokens because LA Token is now entering into the space as a security token exchange, and being able to be promised liquidity is something that we're excited to see in the industry moving forward.
Yeah, no, we'll cover this topic a little bit more later, but definitely very interesting news indeed. South America, their third largest investment bank, known as BTG Pactual, made an announcement recently that they are jumping in on the Tezos blockchain. And they intend to do that to do security tokens. Very, very interesting. So much so, in fact, that they claim to have $1 billion in issuance. A common phrase we like to hear from many issuance groups and investment banks and the like, but it has a little bit more weight to it this time around because BTG Pactual, for those of you who don't know, they have about $44 billion in assets under management. They are the real deal. And in fact, they've already done this. They launched their first security token offering called RABES, I believe. And what that offering is a real estate one, actually, representing equity in distressed real estate in Brazil. They actually also partnered up with Dalma Capital, an asset manager out of Dubai that was the book runner for Raves, but I'm sure also is working very closely with BTG as well as bringing assets and issuances out to the industry. I can read you a quote here from the article that I also found very interesting because it does give you a little bit more insight to BTG Pactual's ambitions here. And they say, while the bank remains protocol and technology agnostic and will continue to utilize the Ethereum protocol, we see Tezos as a global player with a robust blockchain for asset tokenization. So I don't think there are too many ways you can interpret that. This is BTG Pactual announcing support and excitement for the Tezos blockchain, but it's probably very likely the case that their first STO was done on Ethereum, that they continue to plan to use Ethereum, and that if something better comes along, they'll probably adopt that too. But it does go to show you that Tezos is becoming a global player. But that's why, to me, the real focus of this article is really BTG, and that's why I'm going to make them my company of the week, Kyle, because any major investment bank like this that is really making a real large initiative and one that I think is very savvy in this space is extremely exciting, and I don't think we're going to see anything but great things come from them and lots more issuances and hopefully global assets that all of us will be able to participate in. And so when I see investment banks doing things the right way, leveraging the technology the right way, and making big moves like this, I get excited and they earn my company of the week.
I'm in full agreement. This is incredibly exciting. As you mentioned, they are a major investment bank, and $44 billion in assets under management is no joke at all. And so even tokenizing fractions of that is going to be tremendous for our industry, being able to pave the way for how other investment banks can also leverage their current assets with security tokens. And as you said, the key here is global player, robust blockchains. So we're talking about, a global international enterprise here and one that we're going to be very excited about moving forward.
I read another article recently on lending and debt, one of my favorite subjects. And it looks like there's a new entrant to the decentralized P2P lending platform space. Their name is Constant, and they're a great, overview of their platform on Hacker Noon. So, anyone interested in this topic, I highly recommend you check it out. They like to point out that in the market today, there's, incredible potential, the usual $100 trillion plus of opportunity. But in reality, if you look at and analyze Dharma and Compound, at least in the article, they claim they've only done in combination roughly $10 million in volume of loan issuance. Definitely not a big number whatsoever. So they have gone ahead and they're building out a whole lending platform. And the idea is for, you'd be able to invest in orders, borrow orders. You can actually be a market maker to try and set the interest rate, or a market taker to take the interest rate. The idea is, of course, to make borrowing money a seamless and instant process. And they are, hyping the major value that I agree with of smart contracts, being able to, of course, improve this process, but as well as secure collateral, and really on a programmatic basis make sure that all of these rights and protections are enforced on behalf of investors. And to make it even easier, the platform itself is using stable coins and cryptocurrencies to make it easier to actually collateralize those loans. And the market opportunity is definitely enormous, and so I definitely want to keep an eye on them, but it's not necessarily the future. We all know that there's going to be certainly some pushback on the decentralized model. We know that Providence is doing something similar, and they've done $80 million in loans already, and they haven't even rolled out their public blockchain yet on the debt side of things, and they're doing it in a more regulatory focused, supportive, financial industry collaboration model, which is certainly also something that could be potentially seen as the better or the right strategy. So it'll be interesting to see how all of these end up playing out. But the main theme remains, which is the middlemen who are charging origination fees, sourcing fees, maintenance fees. These things that can sometimes lead into the hundreds of basis points of additional costs for all sides. All of that can be commoditized. I fully agree with that. And so as a result, one of these technology platforms could indeed be the future rails of lending and borrowing, et cetera. So, if you're interested in the space, definitely keep an eye on Constant and go learn more about them.
Debt is a really interesting industry, just because of the fact that most people don't realize that the debt markets they trump the equity markets, certainly in the public sector. And so this is a 3 to 4 times larger market than what we're seeing with public securities. And so don't sleep on debt. Debt may be the most expansive, it may be the most profitable, and it's certainly the one that gets a little bit less press attention, I feel like, than equity startups, which can generate the huge multiples, which is fantastic, but debt is that tried and true engine of most economies. So it's very exciting, and it's a very promising industry for sure.
Less sex appeal for sure, but definitely don't sleep on it.
So I actually have another interesting announcement I'd like to promote here, and that's one of our partners at the Security Token Group here is Tokeny. And Tokeny just announced that they filled their $5 million equity raise. Tokeny is a European security token issuer, so along the same lines as a lot of our earlier news. And Tokeny actually has their own T-Rex protocol, that's what they're calling it, and it's their own regulated protocol for European exchange. And they're a fantastic issuer that's generating a lot of great deal flow in the industry. And they were actually selected as the 2019 Startup of the Year at KPMG's FinTechs Awards in Luxembourg. And so they're really making a great push. They're building a strong brand for themselves in Europe. And Euronext, which is the leading pan-European exchange in the Eurozone, actually filled the entire $5 million capital raise.
Wow.
And so they bought about a quarter of the company and have some governance and representation in that company now, and I think that's a tremendous move. We're seeing a lot of news from inside of the U.S. with NASDAQ and some of these other large investment and financial industries businesses that are considering how to enter into this space. But what we're seeing from companies like BTG Pactual and now Tokeny, and certainly with Euronext, we're seeing a lot of these large players really getting some skin in the game and actually looking how to leverage this technology. So a full $5 million subscription to the entire round. Clearly, there's a ton of faith that this company can really launch an awesome product and scale that thing to the demand that a Euronext might need. But this is a tremendous vote of confidence for our industry abroad. And so we're waiting on the US, but for Euronext setting the tone for other exchanges around the world and for leading financial institutions, they're going to be my company of the week. Bravo to them and congratulations to Tokeny.
A great choice, Kyle. Euronext is a major strategic investor, and I too see it the same way as you. This is one of the first major moves by one of the major exchanges in the world. It's one thing to say you're talking about it, and another to say you're doing pilots and supporting, third parties. But this is a real step forward because they are now invested into a company that is bringing issuance to the Eurozone, and I think it is again another example that security tokens, there's no stopping, and it's just a matter of when, not if. And speaking of the same big exchange news, I think there was a little good activity. I don't know if I can call it activity yet, but at least according to CoinDesk sources, that Gemini is also applying for a broker-dealer license here in the U.S. Gemini is everybody's favorite crypto twins, the Winklevosses, exchange, and according to this source, that they're applying for an ATS, an alternative trading system license, which means that they will be able to facilitate and trade security tokens on Gemini. The article goes in to say that there was a previous relationship between an issuance platform called Harbor and Gemini. Harbor is very well known for raising quite a bit of VC money out in the West Coast, and having been focused specifically on startup and real estate. They also partnered with Gemini's stablecoin, the GUSD, in order to use that on their platform. So one suspects that perhaps Harbor issuances in the future might be able to trade on the Gemini exchange. But, those two are a brilliant pair, so God knows what else they're thinking and working on for this. And it's an interesting move because it might certainly help their credibility with the SEC, because they're going to become a further regulated, scrutinized company as a result. And they've been actively trying to get their ETF listed. So I don't know if this is any relation, but I certainly think the more that they become a participant and a player with the SEC, the better positioning that I think they'll have. So I think this is some other big news.
It's an interesting pivot for them slightly, just because they did launch their Gemini stablecoin and we're really working hard to find adoption for that. And it hasn't gone quite as well for them, solely because I think that there's just so much competition in the space right now. It seems like many of the largest financial institutions are all creating their stablecoins, most notably recently with Facebook, with Libra, and all of their corporate partners. And so I think that Gemini is now seeing that there's a great opportunity in the security token space. They come with a lot of money. They've got a strong brand and reputation in the industry for being very early into a lot of this technology. And so it's very exciting to see how this goes for them. But we do know that there seems to be sometimes some delays with the broker-dealer applications. I think that you may have something about that too.
Yeah, no, that's actually my next article and a great segue, Kyle. It's an interesting move to be doing the application for the broker-dealer. There's an article that covers this very well in depth, but also we personally are familiar with the matter intimately as well, which is the fact that a lot of people right now are applying for a broker-dealer, whether it's for an ATS or just to be an investment bank or for whatever reason, in order to be able to participate and play in the space without concern of regulatory problems. And that's an issue because, of course, this article claims that over 40 firms are waiting to get approved, and they're kind of stuck in a limbo. And the limbo is not the SEC's fault, actually, believe it or not. The SEC, they are the police and the enforcement agency, but they have also entrusted a self-regulatory organization, an SRO, with a lot of the duties in helping them do this enforcement. And maybe you could almost look at it like FINRA, also known as the Financial Industry Regulatory Authority, is kind of like the administration. And whether it's the SEC telling FINRA this is how we want it, or whether FINRA's slow walking it themselves, it certainly is safe to say that it is FINRA holding up these 40 licenses because they are the ones responsible for approving them. And this is really interesting news because this is why partly why the U.S. gets a lot of flack because here you have at least 40 companies, God knows how many more, that are actively trying to build infrastructure, technology, and innovation around these topics here in the U.S. And they're not trying to do it without the support of the SEC. They're trying to do it with it, and it makes it very difficult to say, hey, I want to build technology in the U.S. and help this economy. But then you see things like this happening. And the reason we're also very intimate with this subject is because we at STG, having raised venture capital, we were also exploring the use of a broker-dealer. As a consulting business, certainly with an investment bank, we could actually start to help promote and broker offerings and build out an investor network of our own. Same thing for the marketplace. It would allow us to give a lot more latitude in what we're able to do. And right now, we've decided to stay in the confines of what we are legally allowed to do without a broker-dealer license because of the very risk that we foresaw here. We already did start to go through that process and learn that there's certainly a chance that things were going to be very slow. I mean, you can look at the Jobs Act itself. It was passed in Congress by 2012, and then the SEC, alongside working with FINRA, rolled everything out over 4 or 5 years. So knowing that ICOs really took off in 2016 and really even 2017 when the SEC started to get very attentive, it's still early days for this topic, and this is exactly the sign of a slow regulation, potentially stalling things or at least thwarting potential opportunity. And so the fact that Gemini has decided to apply, they obviously carry maybe a little bit more weight, but they may also fall in line and get stuck in this potential limbo. So we have seen actually a lot of other players who have tried to do similar initiatives do things a little differently, instead by acquiring an existing broker-dealer with the existing licenses, which brings up a whole new host of questions, which is what licenses do you need to do which, and do new licenses need to be created altogether, a new type of a broker-dealer license for crypto and security tokens and the like. So, once again, I am not an attorney, but being intimately familiar with the matter, that's also not a foolproof method either. There is a chance that FINRA, after the fact of your acquisition, can actually still deny you your ownership rights and your ability to participate. So it's no guarantee either, but it does allow somewhat of a workaround to start letting you operate and start to actually use a broker-dealer with the supposed licenses that you, or at least have been advised that you need to have. So interesting news, Kyle.
Yeah, it'll be very interesting to see how this progresses. That's really the only word that we can use to describe it, because it's hard to really guess which direction we're headed. I wonder if there may be some interest in forming their own broker-dealer, potentially due to the fact that they want to build a full ATS, which I know is certainly more expensive and much more rigorous in terms of the diligence that's required than a traditional, what they'd call a nickel broker-dealer, which would be something that's a lot smaller. The abilities of a nickel broker-dealer would be certainly a lot less than one that can fully trade securities. Again, I'm not a financial lawyer either, but I certainly know that there are very different layers and levels of what that can mean. So potentially at the high level they're looking to provide services at, they may need to do it themselves, not sure. But again, it hasn't been quick so far. The precedent hasn't been that it will happen quickly, so we'll see how long it takes for them to.
And I don't want to knock FINRA and the SEC completely either, because I do know personally that FINRA has been active working with existing broker-dealers, collecting feedback, surveys, and results in order to better address this issue. And even the author in the article has pointed out that some might believe that this is at the direction of the SEC. So who knows what's actually going on here. We'll be sure to keep you updated. But this is why we shouldn't be surprised when the rest of the world says the U.S. is more difficult to work with.
Yeah, they're trying to make sure they fully understand what we're working on, I think, before making a lot of large-scale decisions. But very, very exciting. We'll see how that progresses over time. I think it's an interesting time to bring up the fact that Herwig and I are working on a proposal of some suggestions to the SEC. If you are unaware, or as a reminder, the SEC has actually asked for feedback from the general public, from investors, from entrepreneurs themselves on their specific securities regulations and how those processes can potentially be optimized in many different ways. We touched on that and went into much more detail, I think, in our first episode, Herwig, when they had initially made the announcement. And so Herwig and I both submitted some of our feedback, and now we're working on more of an agreement that we can try to see if a lot of the industry can get behind as kind of one strong push to the SEC of a lot of positives and a lot of the potential suggestions for how we can optimize the process and be as positive as we can in acknowledging the fact that the SEC is listening and they're trying to figure out how to best understand the space and to make it optimal for both entrepreneurs as well as investors and the entire financial ecosystem. So very exciting. Look out for that. We'll keep you updated on our progress there, and we'll hopefully be able to submit that and get some people on board. If you have any suggestions or things that you'd like to see, certainly reach out to us. I'm active on Twitter. You can find me at Kyle Sonlin, or you can find all of our links on LinkedIn or through our websites and give us suggestions there. So don't hesitate to reach out. And on top of that, I'm excited to discuss just briefly that Swarm has gone live with their master nodes for their blockchain. And so if you're unfamiliar, Swarm is also an issuance platform, just like many of the other ones that we've discussed at length so far today. And the difference with Swarm is that they actually did do an ICO along with Polymath in the 2017 success of crypto and are really looking to optimize that and use it productively. And so with a master node, essentially what that means is you buy a specific amount of the native token, which gives you some ability to make governance or validate specific transactions in the system. And so Swarm has a very expansive plan for how that will work, and I don't want to misrepresent it. So certainly if you're interested in learning more about Swarm and their master nodes, which are working with security token issuance, so being able to participate in the actual distribution network is an interesting proposition. That does return fees for participating, and you get paid for that in their native token, and you're really benefiting the ecosystem. So they went live with that, and they almost have 250 nodes so far. I think it's 235 or 240 at the time of recording, and each node needs to lock up specific tokens. So I think that they've almost locked up 12 million of the 100 million total fixed supply. So at least 12 million of the full supply of Swarm tokens are now held by these master nodes that obviously will not sell because they need to use that as staking for their governance. So it's interesting. They're making great progress on the technical side, leveraging a different method than we've seen with some of the other issuance platforms, some of the larger players, or maybe some of the more traditional institutional financial industry players. They're not definitely going to be doing it much more centralized, and so it will be interesting to see how Swarm performs, bringing it from a different angle.
It's impressive news for sure, to say the least. I know it's only been, I think, a week of launch, right? So to already have almost 250 master nodes is amazing. I do understand that there is no network participation yet, but that's because it is early days, and one could look at that as maybe the best time right now to get a master node. So definitely, like Kyle said, if you're interested, go check out and learn more about how Swarm is doing things a little bit differently. As you mentioned, also another company that was able to do a successful ICO, Polymath, always gets a lot of attention, and it seems like they have made yet kind of another major announcement saying that they are sharpening their focus on their security tokens and honing on their vision for digital securities. Alongside with that was a series of employee layoffs. And the quick bit on the article here is it is important to note that the company is not abandoning its current development on Ethereum. Polymath's technology solutions have experienced a great deal of success thus far, and Polymath Token Studio remains the ideal pathway for organizations looking to create and distribute their security token today in order to subsequently migrate to Polymesh, their purpose-built blockchain that we discussed, I think, last week or so. Mm-hmm. This is coming from the CEO of Polymath, Kevin North, who also enforced the fact that when he signed on in the fall, he discontinued two major initiatives already there. And that now they're dropping two more products again to try and show that they're really focused on their vision. It does seem a little conflicting to say that you are maintaining support for Ethereum while building towards this new platform that you are building. But in the end, I do know that they've seen tremendous success so far. And the reality is of course, with an ecosystem of issuers and the technology built, I'm not sure why you would abandon that. So the move makes sense to me. It's just seems a little conflicting as to what is Polymesh and why is it so much better than your current product, and when is that going to happen, and does that transition affect my current issuance, et cetera. It certainly brings up a lot of questions for me. Polymath did have reportedly earlier in the year 60 employees. So it's definitely one of the larger technology players in the space today. And so, again, this seems to me like a statement to bring back community and investor confidence, if you will.
Yeah, it's a long road for them. They were very successful in their ICO and did a great job of really bringing security tokens to light for many people around the world, and hopefully, I wish them all the best. I'm excited to see the Polymesh, as we discussed it last week. They're working with one of the co-founders of Cardano, and so I'm sure it's going to be great technology. Really what it comes down to is how's their deal flow. Can they help issue successful security tokens? If they can do that, I'm sure they'll be successful. I'm sure this will make them good business, and they'll be able to scale it from there. That's all it comes down to is the quality.
Well, that's all I have for my news segment here, Kyle. So I'll pass it over to you to tell us what's the latest in security token offerings.
Yeah, so an interesting week in security token offerings. The first piece, just like what you did with the security token industry news, I wanted to address an idea of a security token offering use case that has been successful so far that we hadn't noted before. And that's actually Steam Monsters. And so Steam Monsters was a security token offering launched by Steemit, which was a crypto news and blog industry company. And they launched Steam Monsters, which is actually a online video game platform that leverages a security token in the form of a non-fungible token. And so a non-fungible token is essentially a unique identifier that is attached to a specific security token. And so essentially what non-fungible means is that each item is unique, right? So each one has a serial number or an ownership number, in the same way that there are batches of alcohols, there are, the serial numbers on baseball trading cards, and there's a lot of value that's attached to being one of the first, or the lower the number certainly seems to have more value in a lot of specific collectible forms of assets. And so non-fungible tokens are also something that we can build on the blockchain. And so the applications for non-fungible tokens scale across many industries, but what we're seeing right now is actually in the gaming space. So with gamers and having any kind of asset, whether it's unique trading cards, whether it's anything that has value for its intellectual property. You can even scale this to something like art, where the Mona Lisa ownership, there's no other replacement for that. You can't just print another one in the same way that doesn't really matter which specific share of Google stock you own. But having a specific ownership in a painting is unique, and that's something that can't be recreated. It's something that can't be easily switched for an identical copy. And so the method of recording this is very interesting. We're seeing a lot of scaling and traction, and Steam Monsters was successfully able to raise $300,000 for their security token offering, and I think that they have thousands of active users per week. So they're actually doing very well for an online game in terms of leveraging security tokens for their gaming experience.
Oh, very cool.
Then, just like what you discussed with a security token industry report, I also found one from the Blockstate STO study. And through all of their research, they were able to find that there's just under $1 billion raised for security tokens. And this number is one that certainly seems a little bit high to me. Again, I don't want to claim that their information is wrong, but from what I've seen, it certainly seems like that's tremendous. And they've noted that 64 security tokens have been completed, with a majority from the US. And I don't know if I've seen 40 or 45, maybe 30 security tokens that have successfully completed their full raise. I think that there's many more than 30 or 40 actively trying to raise. But I think still at this time, we only have, I think, 5 that are liquid now in US markets. And it's questionable to see which ones have actually successfully raised. And potentially in some of these reporting sites that were used by Blockstate, some are ICO platforms. So it is difficult sometimes to differentiate between very early STOs, early security tokens, and the late ICOs, solely because a lot of ICO businesses were trying to call themselves security tokens when in fact they had no asset underlying the token. So not exactly sure on the full validity, but it's a tremendous wrap up, because they actually include all of their sources for all of the security tokens that they've identified that have started their raise, that have begun, where they were based out of, issuance platforms, the type of investment vehicles. We also have all of that information on Security Token Market, where you can see a really detailed investment page for all of these offerings that we have been able to map, which is over 225 worldwide. And so definitely go check out that study. It's a good way for you to learn more about specific security tokens in the industry in a very compact way. Additionally, we've mentioned Bitbond on the show before. They are a debt protocol that's launching and trying to issue debt on the blockchain, something that we've discussed at length in pretty much every episode now. And their STO actually ends Monday, July 8th. So that is today, the day of recording. Unfortunately, for our next episode, will go live past the date of their fundraise. So if you hadn't gotten in at the time of listening, unfortunately, you won't be able to get in on their primary offering. But there have been a lot of success with Bitbond, who have initiated over 3,000 loans in 80 different countries around the world with $13 million in loan volume. They did an STO, and they were successful in closing a lot of that. I'm not sure if they filled their entire round, but I know that they've raised over $1 million, which is great. The token pays out in interest per quarter. And it's actually, they do have an agreement with the Stellar Decentralized Exchange that their offering will be traded there. So it's going to have liquidity at some point hopefully in 2019, potentially 2020. And congratulations to that team for good marketing, strong branding, and we'll see when they go live how they perform. On top of that, we mentioned Stellaro last week, who started their security token offering. And I just wanted to note that they did a full hour-long AMA interview with 2 executive team members. You can find that on STM News. But if you're interested in hearing more about a specific STO and how their team is what their perspective is on this offering and how to leverage this technology, definitely go and check that out. It's through Facebook video. And then 2 token offering launches that I were able to find that are new. Benipal is launching their Want security token. Benipal is a B2B marketplace in India, if I believe. It's built by a very successful Silicon Valley entrepreneur, and they are launching their token offering that is non-voting common stock with a 3% quarterly dividend. And so I'm not fully sure on the full financials of this offering. I'm not giving any investment advice throughout this podcast, but certainly it'd be interesting to check out. They note that there is no B2B marketplace in India outside of themselves and their proposed plan. They certainly seem to have experience in that industry prior, so it may be something interesting if you're looking to get some exposure into either an international investment or maybe into the B2B space. We also have Renvale token. There's a crypto exchange based out of Estonia called Renvale Capital, and they provide crypto exchange services for many of the top market cap coins. And they are doing a security token offering. There's not quite as much information on this offering. It may be very new still, and they're working on some additional information. But definitely check it out if you're looking to get any kind of exposure to a crypto exchange.
Behind last week's episode with Merge, the Seychelles-based security token exchange, and now looks like Renvale out of Estonia, yet another jurisdiction trying to build security tokens. I think you're getting a lot of opportunities to potentially be invested in the next New York Stock Exchange or NASDAQ of the future.
As we noted, whether they scale to the point of really successfully competing on the global industry or in the global market, we also noted that I think there was 10 or 11 acquisitions by some of the U.S. exchanges just in the U.S. over the last 10 or 15 years. They make many of acquisitions of other exchanges that are listing specific assets, and so some of these small exchanges that get in first may be acquisition targets for larger exchanges or for larger capital institutions who want to enter into this space but don't want to have to build all of the infrastructure or get all of the regulations themselves. So it's nothing but good things for the industry as it reduces friction by paving the way and offering opportunities for larger institutions to really buy in and be able to just immediately be a player in the space.
Yeah, absolutely.
And finally, we had a user-submitted article for INDX, the security token offering, which is now live through the Swarm platform. And INDX, or Index, as I believe they call it, their plan is to bring masternode participation to the masses. So as we identified with Swarm, masternodes are the computers and the people or organizations that buy in to validate all of the transactions on a blockchain. And we see this with a lot of decentralized organizations, either through blockchain or even Libra has a masternode concept that they had 28 users buy into at $10 million a piece. So masternodes are something that is not uncommon in the crypto and blockchain industries. And INDX is looking at it and saying, hey, we'll buy stake in as many masternodes as we can. And so you don't need to learn how to program. You don't need to build out the proper terminal to execute on masternode transactions, but instead you can invest now and get participation and get some exposure into masternodes. And as you said with the earlier exchange, play a part in the infrastructure this way without having to actually buy the computing power yourself.
Tell me, Kyle, is INDX with their masternode play going to be participating in Swarm, since we just mentioned them?
They actually are not. In their current initial listing, they are not going to be buying a Swarm masternode. Not sure what the logic is there. Potentially they didn't want to seem too dependent on Swarm. Potentially they want to wait. Maybe it's too expensive. Maybe I'm not exactly sure. I could only guess a million different reasons. But from what I saw in their website, they will not be, at least initially, investing in Swarm. They did note that 50% of the revenues generated from the masternodes will actually go to reinvesting into the fund. So the goal I think here is to continue to buy as many nodes, potentially to have a full portfolio of master nodes across many industries and many sectors. But at least for now, I think they're going live with 5 or 6. You can find those available online, and if that changes moving forward, we'll definitely be the first to let all of our listeners know. 50% is going to increasing the fund, and the other 50% will be redistributed back to the token holders. So that's about it for me, though, with security token news. That being said, we did note that we wanted to mention there is a conference going on right now. Herwig, what you want to talk more about that?
Yeah, absolutely. It's a little last minute here, but the Barcelona Trading Conference is going to be happening on July 10th and 11th. And there are some very notable speakers that are going to be there: Securitize, eToro, Swarm, Into the Block, Definitely an interesting conference covering all aspects, but of course also security tokens. So we do try to highlight, and we will be moving forward on the show whenever there are major conferences and events happening around security tokens or on them. We'll certainly be sure to try and include them in the podcast every week.
And with any interesting announcements or news that breaks at a conference like this, you can certainly trust that will be covered immediately as soon as that news breaks for the listeners as well. So feel free to just check here next week and you'll hear anything exciting that was announced at the conference.
So what do you say, Kyle? Now that we're all out of the latest news and offerings, I think it's time for us to dive into our juicy conversation around IEOs for STOs.
Yeah, it's an interesting idea. We've flirted with it a little bit earlier in the episode, but what were you thinking, Herwig? What gets you the most excited about IEOs?
Yeah, so IEOs, as we mentioned in the start, it is the latest acronym. It's certainly interesting because we often like to differentiate and try to point out that the crypto and the ICO world is certainly nothing to do with the security token world. And in this case, what actually happened with IEOs was they first became popular as the new alternative to the ICO. There's a lot of different reasons for this, but it gives it a lot of logic put behind it, being that if an exchange with its own name and reputation is willing to vet and list them directly onto their exchange, that there's certainly a lot more liability, certainly a lot more reputational risk, and so one would expect that these projects are a lot more vetted, a lot more chance of success, and very interesting. And so that world started to move and adopt, and Binance was a big leader of this new trend to help these crypto exchanges list IEOs instead of ICOs. And as you pointed out, Kyle, it's actually how the traditional markets work. Before you invest in an offering, you want to know, is this investing in the New York Stock Exchange, or is liquidity going to be on the NASDAQ or OTC? And even many don't know that the NASDAQ itself suffered a lot of reputation after the dot-com bubble. A lot of the technology companies that were wiped out were listed with the NASDAQ, and a lot of investor confidence suffered as a result for quite a while. It was through a series of acquisitions and rebuilding that they were able to bring themselves back to one of the leaders today. But this is certainly not new. And in that regard, the concept of an initial exchange offering certainly applies to security tokens as well. As you pointed out, Dreamer is in fact going to be one of the first, if not the first in the U.S. to do so.
Non-U.S. investors only.
So for non-U.S. investors, but it's for supposedly a U.S.-based company. So that's an interesting move. But that leads, I think, to a lot of the questions that we're going to talk about here now, which is, how does it work? Is there only one way that it could work? I think personally, the more likely situation is what type of listing is this and what type of asset is being listed. In that regard, I mean, are you actually raising money for a new project or a new asset, or are you taking an existing security and listing that instead? And the process of that, I think, is dramatically impacted because at one point, an exchange is meant to be a secondary market, right? It's meant to be the liquidity for these assets after they have been able to find initial buyers on the primary sale. But it certainly seems like for a lot of these offerings, whether they're crypto or potentially someday security tokens, that they are going to be almost raising their money primarily on the exchange, which is certainly not like the traditional markets where one would likely go to a major investment bank and they will help you perform a roadshow, and you will get those primary investors for your offering through that, and then list on the exchange the next day or whenever they end the roadshow, and hope for a pop with the public retail markets now being able to access this. So I'm not sure what your thoughts are, Kyle, but I'm certainly curious myself to see how a lot of these security token exchanges are going to be actually implementing a concept of an IEO, and if there potentially is any risk or regulation that we don't know about preventing something like that from happening.
I think you're totally right. You covered a lot of topics there. And so a couple of things that stuck out to me particularly that I like to talk about were mentioned by you earlier. And so the first piece is the reputation. And so as you correctly identified, the NASDAQ suffered a little bit and a lot of bit potentially, when the tech bubble crashed and a lot of these offerings were deemed to be essentially worthless. But they've also ridden the reputation of success now that they've listed a lot of very successful tech companies, and a lot of the current largest tech companies are listed on the NASDAQ as opposed to the New York Stock Exchange. And so it is something that is a reputation definer for these exchanges. What kind of assets can you provide for me? And that's all that I really care about. And so the other difference is that oftentimes, at least in current security token markets, you're trading directly with these security token exchanges. So when I want to buy a security token here in the US, I'm buying it from Open Finance. I'm going on Open Finance and buying it from their site directly, as opposed to working with brokers or custody managers who make that intermediary purchase, like a TD Ameritrade or something like that. And so having that extra set of middlemen, it'll be interesting to see how these markets parallel or are very different, because as you're correctly identifying, it's even more reputation dependent when these assets could be exclusively on specific listings. But as we're seeing with security tokens, there is an ability to move your assets from one exchange to another. Do you want to talk about that a little bit?
Yeah, absolutely. So I guess what you're getting at too is being able to do cross-exchange sales, possibly even cross-border as a result. We know that there are security token exchanges popping up all around the world. And so one has to wonder, you're not going to be able to go and buy Facebook on both the NASDAQ and the New York Stock Exchange. This is also by principle to be able to say that, all the investors have to go to NASDAQ. So will exchanges actually be creating barriers of their own for their IEOs? Will they prevent me being able to take my tokens and go to T0 potentially, even though they might be supported by the same underlying technology? I may not have the right to go ahead and list it on T0, let alone somewhere else. And those are really against the whole concept of security tokens being able to implement a better, meaningful way of transfer of value. Without necessarily the need for one exclusive exchange to manage that liquidity. So in that regard, I would have to speculate that exchanges are going to have to be open, similar to what we discussed last week with T0 and OFN and Securitize kind of being the underlying technology. But I also love to say that traditional markets are really just being evolved here by the technology. So to assume that everything will just be flipped upside down is also cautionary tale in itself. So I think once again, because of the crypto world, you're seeing new innovation on the security token side, and this is certainly brand new innovation and is yet to actually be proven, especially here in the U.S. market.
Yeah, and I think that the other piece of secondary trading that we're still working on with the security token industry and infrastructure is those market makers, and are a lot of these brokers and custody solutions that, as we discussed, Coinbase is trying to provide, and these players are also crucial to preventing extreme volatility by providing liquidity, which needs to be available in order to be there, right? Just being able to trade it on an exchange does not mean it's liquid. And so there are large financial institutions handling that for secondary markets in traditional public markets, and price discovery will be very important for security tokens and being able to understand what this thing is actually valued at, as opposed to emotional discussion and emotional reaction. So it will be very, very important that as we maybe shift towards IEOs and providing secondary trading for a lot of these tokens, is that we're being smart about how we scale this thing. Just listing 100 different assets on an exchange that may not be quite prepared immediately to list them all or something like that could cause some serious shockwaves as we really try to grow.
I think you're highlighting some key points here, Kyle, which is, unlike with, say, a Binance who is more focused on the actual smart contract, the underlying tech, making sure that the project itself is very legitimate, to do an IEO for a security token requires a much bigger infrastructure for an exchange to be pulled off. In fact, this is the very reason why you don't see NASDAQ or the New York Stock Exchange managing the offerings themselves. It's the very role investment banks play in the space today. So for sure, I think we're going to see a lot of interesting executions and attempts and experimentation with the concept of an IEO. But to really do it properly, the type of infrastructure to make sure you have partners, you have, almost, the right custody providers, the right structures, the right evaluation techniques and tools, and for exchanges that are very specifically agnostic, this seems like an even greater challenge, right? If you were focused maybe specifically primarily on real estate, you might be able to better put in the controls to identify what offerings would be good direct listings right on the exchange. And we have to be fair too regarding the public markets, which is direct listings are becoming a thing now again. You saw Spotify do it successfully. You just saw Slack do it again successfully. So maybe we're not too crazy to think that perhaps this is a route that security tokens will eventually adopt. And the idea that all of the marketplace and liquidity is around the exchange directly as opposed to these kind of distributed primary fundraising channels like the crowdfunding portals and the communities that are scattered across. You kind of have a more concentrated pool of investors that you can immediately target with the offering, which might lead to better price discovery, demand analysis, etc. So I think this is very topical for us to be speaking about, despite the fact that there aren't necessarily huge examples of this yet.
Totally. And then the one thing for investors to be slightly wary of is, as we've seen with the rise of IEOs in the crypto scene, they seem to, just like what we've seen in IPOs over the last 5 or 10 years, is a tremendous initial spike as everyone is very excited about the offering and it has all of the hype. The price hits a certain multiple, and then it seems like many of the initial speculators dump, and it can kind of cause a large or a small term bubble for these specific offerings. So definitely make sure that you're being conscious of what you're buying and you're confident in the long-term propositions as opposed to just buying off of speculation or things like that, because it isn't healthy for the market, and it's important to build moving forward.
Let's say, Kyle, that IEOs are able to come onto the platform and use this as an offering. Let's take Slack as an example. Do you think Slack could potentially, if the infrastructure was there on the private markets, have considered doing a direct listing on, say, a T0 or an OFN or maybe even a Gemini, than, say, having to go down the route of going public and doing a public offering on the NASDAQ?
Totally. Traditional public offerings are very long, very cost expensive. They are certainly opportunistic cost-wise. It's incredibly expensive in all aspects. And security tokens are an even more programmable, more effective, efficient investment offering. The only potential hesitation is that many of the private securities exemptions do have certain caps. So they have to figure out how much they needed to raise and whether it would work with a private securities exemption. But I think it makes total sense and could potentially even be healthy for some companies where they could redefine their own reputations or really provide some kind of industry leadership, brand leadership by taking on new technologies and appealing to whole new investors through that route. So that could be a very exciting offering in a very short amount of time.
Fascinating. I have no doubt we will continue to cover and talk about this subject as we continue the show. However, we seem to be getting longer and longer with each episode, so I think it's time to call it. But as always, it's been a pleasure. I'm looking forward to catching up again next week and sharing with you all the latest.
Thanks, everybody. Talk to you next week.